Welcome to WorldWire. Please subscribe and hit the bell icon for more breaking updates. While Europe debated regulations, drafted new policies, and argued over the shape of fruit and the color of compliance, another power was quietly building a digital empire just beyond the horizon. In the East, China's tech sector was surging forward, fueled by relentless ambition and a vision to dominate the digital future. While European leaders were locked in endless discussions, China was investing, innovating, and expanding its reach. On a bleak November morning in 2025, Europe's tech industry was rocked as billions of euros vanished overnight, fleeing to Beijing's gleaming towers and bustling trading floors. This wasn't a slow decline, it was a digital Waterloo, a sudden and devastating defeat that left the continent reeling. The battlefield was the stock exchange, where fortunes were lost in the blink of an eye, and confidence evaporated with every tick of the clock. The casualties were Europe's industrial giants, household names that had once defined global excellence, now struggling to survive in a new era. Headlines screamed of a financial bloodbath, but the real story was deeper, more complex, a seismic shift in the world's economic balance. For decades, Europe prided itself on German engineering, French luxury, and Dutch innovation, believing its technology was too complex, too refined, and too niche for rivals to ever truly challenge. European factories hummed with precision, and engineers believed their expertise was unmatched, their products irreplaceable. But that confidence has now turned to panic, as boardrooms fill with uncertainty and the old certainties crumble. China, once dismissed as Europe's factory floor, is now the head office, the research lab, and the innovation hub. Armed with smarter, cheaper, and superior technology, China has become the bank, the builder, and the brain of the new digital age. Investors saw Europe's aging champions, weighed down by legacy systems and slow adaptation, and compared them to China's nimble tech titans, young, hungry, and ready to seize the future. The choice was simple, almost inevitable. Money sprinted east, leaving a gaping hole in Europe's economic heart and a sense of disbelief in its wake. This wasn't just a bad day on the markets, it was the result of China's decade-long transformation from imitation to true innovation, a journey that had quietly rewritten the rules. As European leaders scramble to respond, they're realizing the rules have changed. Old strategies no longer work, and the playbook is obsolete. China is already several moves ahead, shaping the future, while Europe struggles to catch up. Let's talk crash test dummies, not mannequins but million-euro sensor-packed marvels that set global safety standards. These aren't just props, they're the unsung heroes of automotive safety, packed with cutting-edge technology to simulate the human body in collisions. Every year, automakers rely on them to design safer vehicles and meet strict regulations. For decades, European firms like TAS International dominated this niche, selling dummies at a premium to automakers worldwide. Their expertise and reputation made them the gold standard, and their products were seen as essential for any serious car manufacturer. Then China's Qatar unveiled its own GZAC dummies, tailored to the Chinese population, serving a market of 1.4 billion. These dummies weren't just copies, they were designed with local data, making them more relevant for Chinese consumers and regulations. Why would carmakers pay more for European dummies when China offered a cheaper, locally relevant alternative? Suddenly, the value proposition shifted, and Chinese automakers had a compelling reason to buy local. The monopoly shattered overnight, European stock values plummeted. Investors were caught off guard as the market rapidly adjusted to this new competition. But this was about more than sales. It was about control of standards. Whoever sets the standard shapes the future of the industry, influencing everything from design to global trade. China built not just a product but an ecosystem, its own safety standards, certification, and influence. This move allowed China to dictate terms and set benchmarks for others to follow. This is China's playbook. Identify a monopolized sector, invest heavily in R&D, and build domestic capability from the ground up. Identify a monopolized sector, invest, and leverage its domestic market to break foreign dominance. Once established, China's scale and influence make it hard for foreign players to compete. Now, European firms face a new reality. The customer is the competition, and the dummy in the room speaks Mandarin. The balance of power has shifted, and the old guard must adapt or risk being left behind. The crash test dummy saga is a microcosm of China's broader tech strategy. It's a story of ambition, innovation, and the relentless pursuit of self-reliance. Europe's niche monopolies are no longer safe. The world is watching as China rewrites the rules of global competition, one industry at a time. Money is loyal to returns, not borders. Right now, European capital is fleeing to China's booming tech sector. Investment bankers in London and Zurich are facilitating this eastward migration. In 2025, Hong Kong's IPOs raised nearly $28 billion, much of it from European funds. Investors see Europe's lack of AI giants and stifling regulations, then look to China's government-backed tech surge. The result? European capital funds Chinese competitors, starving local startups and creating a vicious cycle. Promising European firms struggle for funding, often forced to sell or accept Chinese investment, with strings attached. Europe, once the cradle of the Industrial Revolution, now risks becoming a passive financier of others' ambitions. At a recent Berlin summit, European anxiety was palpable. Macron and Merz warned, Europe risks becoming a vassal of the US and China, losing control over its data, industries, and destiny. Their fear, Europe is becoming a digital colony, its data harvested and processed under foreign laws. The threat isn't just economic, it's about sovereignty. Storing sensitive data on American or Chinese servers means privacy is at the mercy of Washington or Beijing. Europe, the home of GDPR, is losing control of the very data it fought to protect. Leaders called for simplified regulations, deeper capital markets, and prioritizing European firms. But while Europe drafts frameworks, Chinese and American companies are deploying code and capturing markets. The panic in Berlin is a sign Europe's leaders know they're losing the digital race. AI is the electricity of the 21st century, and Europe is in the dark. While China and the US battle for AI supremacy, Europe is a passive consumer, hooked on foreign-made tools. The continent lacks homegrown tech giants. Investors funnel money into Chinese AI stocks, deepening dependency. This isn't just economic, it's cultural. European firms import not just technology but values and biases embedded in Chinese AI. Europe, proud of its human-centric tech ideals, is outsourcing its digital brain. Some call AI the new digital opium, a quick fix for productivity, but a path to deep dependency. Europe talks about setting ethical standards, but you can't regulate what you don't build. The risk. Europe becomes a rule maker for a game it's not playing. Digital sovereignty was Europe's dream, control over its data, infrastructure, and tech future. But in 2025, that dream is unraveling. Europe depends on foreign semiconductors, software, and now even its niche industrial tech is under siege. The crash test dummy saga is just one example. In sector after sector, Chinese firms are innovating and setting new standards. Each time a European company relies on Chinese tech, a piece of sovereignty is lost. These dependencies can be exploited. Europe is building its digital future on rented land. The launch of a global standards group in Shanghai signals the shift rule-making power is moving east. Europe is becoming a rule-taker, not a rule-maker. The erosion of digital sovereignty is slow, but may soon be irreversible. As 2025 draws to a close, Europe stands at a defining crossroads, facing choices that will echo for generations. The continent's future is no longer a distant question, it's a decision that must be made now, with consequences that will shape the lives of millions. One path is to fade quietly into comfortable irrelevance, becoming a living museum powered by foreign technology, admired for its past but sidelined in the world's future. Europe could become a showcase of history, but not a driver of innovation. Another path is to adapt, focus on a handful of key strengths, accept a more limited autonomy, and forge strategic alliances with global partners. This means making tough choices about what to prioritize and where to lead, while relying on others for the rest. It also means letting go of the dream of total sovereignty, instead aiming for strategic autonomy in select sectors where Europe can still compete and excel. The third path is to fight back. This would mean building a truly European tech ecosystem, tearing down national barriers, and investing massively in homegrown champions. It's a bold vision that demands unity and ambition. Such a path requires aggressive industrial policy, unprecedented collaboration, and a willingness to take risks. The rewards could be immense, but so are the stakes. The choice Europe makes now will shape its global role for decades to come, determining whether it leads, follows, or fades away. Will Europe become a digital vassal, a niche specialist, or rise again as a resurgent power on the world stage? The answer is not yet written, One thing is certain: the era of complacency is over. The time for difficult decisions and bold action has arrived. The next few years will decide if Europe can forge a new destiny for itself, or wake up to find the future built elsewhere, by others, while it watches from the sidelines.